and welcome to Paisa Live, and we have with us Mr. Ishpreet Singh Gandhi, who is the founder and managing partner at Stride Ventures. First of all, welcome to our show.
Thank you. Always good to be on AVP.
Such an insightful and interesting session it was. And we have noted down some points, like you mentioned, that especially in the traditional businesses, venture debt is still seen as it's more perceived as a negative thing. Do you see this change with the new age founders and the new age startups and new companies?
Yeah, so I would not say venture debt, but debt as a word I was saying that generally has been in India perceived slightly negative.
Still
right?
today?
Generally, right?
Generally.
So what we had been trying to do is to educate that for the business, if you want to expand any kind of business, and that's why we get people from the industry to speak about who have built large businesses, that how much efficient debt has been in terms of a use case. So I think very few people know the real use cases. So that education has started picking up. If you see the numbers of the report, it's always gone up in terms of the usage of debt.
Right.
And I think getting all of this data, that with what kind of companies are using, how you can use it more efficiently, and how the business requires it inherently, is an important part of that mix. So overall, I do think that the mindset is getting changed, and that reflects in the numbers. But yeah, I keep on saying that there's a long way to go, because there's so much to deploy and so many use cases and so many kind of companies. So the number should only keep on going up.
If you want to name such companies, like some success cases.
Actually, what has happened is there are a lot of companies recently, last year specifically, since this is the 5th version of our report,
Right.
who've gone public in the meanwhile. So there are a lot of companies who took private credit before going public. They were likes of Aether, they were likes of Bluestone, who've believed that taking it at the right time, at the pre-IPO time, would give them a good way to not dilute those amount of money.
Maybe leverage.
As they go public, they'll be able to conserve their dilution of the pre-IPO. So I think if you'd see, largely it's 15 to 20% of the pre-IPO rounds, they have been okay taking debt. And that's a good use case for getting into public markets, because good companies have always seen better momentum from the pre-IPO round to the IPO round. So there's a very clear use case which gets developed, that as you're taking a private credit round,
Right.
private equity round, you collaborate with private credit. Similarly, we've done acquisitions internationally, where the use cases can be Indian companies trying to go global. They can have that balance sheet debt to ensure that they can acquire larger companies, or they can increase their stakes. So the various things, the secondary markets have developed. So people are coming in and trying to buy stakes, right, which can further have a use case of debt. So these are the new use cases besides what we've had in the past, which has developed specifically in the last 12 months. But if you see our deployment of sectors, fintech remains robust, consumer
Right.
remains robust, and some of the other sectors
I
are
think
becoming.
it has remained the same in the past 5 to 7
Numbers
years.
have increased for deployments for sure.
But the sectors remain same.
Sectors will always remain same, because these are the capital intensive sectors.
Correct.
So a fintech or a consumer or a climate EV oriented sectors will require capex, working capital, heavy balance sheet capital requirements. How much you can dilute with
Correct.
equity. So there will be certain level of consistency in terms of the sectors, but the use cases and the deployment within those sectors can evolve depending on what kind of years we are talking about.
So how do you see debt as an asset class?
From my
Especially
perspective.
from your perspective, especially for Indian market.
Look, I'll always say I've had personal use cases of debt, so I believe if used efficiently, it is an amazing flex to ensure that they have better return on capital. And I think it's more about education and having right processes and finance teams to understand that. Because if, again, not used hygienically, it can deter the company's growth as well.
Correct.
So I think it's all about positioning it at the right time in the company. And that's what our work is, whether it's us or the other people who actually deploys in the ecosystem. Our work is to make sure that we educate that where it can be very, very useful and where you can stay away from it themselves, in order to make sure the company doesn't get affected.
There are emerged markets like US where debt is seen as a mainstream, but in India still it has not been seen as mainstream. So do you think how many years it can take, or what are the current challenges that Indian market is facing?
I would not say as challenges. So if you broadly see, right, the mid companies or large companies in India are leveraging 2 to 3 times of their debt to equity,
Correct.
while startups would not have more than 0.2 to 0.5. I think there are various companies or various phases. Till the time you're not positive on unit economics, profitability on the bottom line,
Right.
they'll always be constrained to take as much of debt. The moment you're profitable, your leverage changes. So I think you have to understand which gears the company are in, and as they keep on evolving, the startup becomes mature, and that maturity will result into more hygienic use of balance sheet and the finance controls, which results into more debt uptake.
Correct.
So the journey has to evolve for companies, and the journey is evolving as we have enough companies now in a portfolio who are talking about 1:1 debt to equity, which was never the case. And the businesses kinds will evolve. So very heavy on manufacturing or heavy on anything which requires a capital expenditure to be done or a fintech book to be created will be requiring more debt. So I think that education in those companies, set of companies have gone up, but overall the profitability element as it starts coming up more, the debt requirements will keep on going.
Well, thank you so much, Ishpreet.
Thank you.
So much
Thank you.
for having
Thanks.
this conversation.